What if I told you that gold, the world's oldest and most trusted safe haven, is on the brink of rewriting financial history? At this very moment, gold is climbing toward an astonishing $3,700 an ounce, pushing closer and closer to a level that could ignite the next big wave in global markets. This isn't just about a chart reaching new heights. It's the unmistakable sound of the financial alarm bell ringing loud and clear. When gold rallies like this, it's no coincidence. It's a signal, a warning, that something huge is brewing under the surface. Slowing growth, a weakening dollar, and central banks making moves in the shadow. And if you ignore this signal, it could cost you a hefty price. Welcome back to BrainFuel Reads. This is part of our provocative What If series, where we dissect the potential scenarios that could reshape your wallet, your world, and your future. Today, we're diving into the implications of gold's near $3,700 surge. What does it mean for the Federal Reserve, the economy, and your financial outlook? And just how far could this rally take us? Stick with me, because by the end of this video, you won't just know why gold is on the rise. You'll uncover what it's really predicting and discover what you should do right now to prepare for what's coming next. So for now, we're living through a moment where uncertainty is the only certainty, and nowhere is that clearer than in the sudden surge of gold. As we speak, the price of gold is climbing relentlessly, edging closer and closer to $3,700 an ounce, smashing through resistance levels that traders once swore would hold. This isn't just a quiet rally, this is front-page news. It's trending on trading floors, lighting up investor chat rooms, and making headlines from New York to Singapore. And it's not just gold ETFs or futures contracts doing the heavy lifting. Central banks, yes, the very governments themselves, are buying gold at unprecedented levels. Retail investors are piling in too, from seasoned hedge funds to first-time buyers who no longer trust their cash to sit idle in savings accounts. Meanwhile, other markets are on edge. Stocks are volatile. Treasury yields are dipping as money floods into bonds. You almost can feel the tension in air. It's as if the market is bracing for something monumental, and everyone is scrambling to find shelter before the storm breaks. So the burning question remains, why gold and why now? Because gold doesn't just move randomly. Right now, we're witnessing a perfect storm of factors driving its prices higher. First, let's talk about the Federal Reserve. After holding interest rates at multi-decade highs, the Fed is now confronting a slowing economy. Job growth is faltering and unemployment is inching up, still manageable but enough to rattle Wall Street. As unemployment rises, the Fed is likely to consider cutting rates, which is music to gold's ears. Lower interest rates mean the cost of holding gold diminishes, and that's a major reason for the current surge. Next up, the dollar is weakening, and this is critical. A softer dollar makes gold more affordable for buyers in other currencies, and as the greenback slides from its recent highs, global demand for gold is increasing. We can't ignore the economy either. It's sending out warning signals. Manufacturing is sluggish, retail spending is cooling, and consumer sentiment is faltering. The word recession is creeping back into analysts' discussions, and any hint of economic slowdown only fuels the gold rally as investors seek to protect their wealth. Then there's geopolitical risk. With escalating trade disputes and rising political uncertainty in key economies, gold shines especially bright during times of instability, of which there's plenty right now. Finally, central bank buying is a powerful force driving demand. Countries like China, India, and Turkey are accumulating gold at historic levels, seeking insurance against currency risk and valuing something tangible that no government can devalue. Combine all these factors, and you get a relentless drive upward for gold, symbolizing a growing global lack of confidence in the current financial system. So, what does this surge really signal about our economic landscape? Gold doesn't shout, it whispers. but right now its whisper is impossible to ignore. Each surge in gold prices is like a signal flare for the global economy, and today, the message is clear. First, it's telling us that trust is breaking down. As confidence wanes in the dollar, the stock market, and even government bonds, many are flocking to gold. This movement reflects a deep-seated lack of faith in the system, especially as central banks, hedge funds, and governments gear up for potential turbulence. Second, it's echoing fear of rising inflation, economic slowdowns, and central banks losing control of the narrative. While inflation has subsided somewhat, the shadow of 2022 and 2023's price spikes lingers. Right now, gold is seen as a vital insurance policy against these uncertainties, and investors are eager to safeguard their assets. Third, it hints at anticipated change from the Federal Reserve. Traders are not merely wishing for a rate cut, they are betting on it, which points to perceived weakness ahead, perhaps even a looming recession. And gold is leading the way in this expectation. Yet there's a brighter side to this signal. Gold represents more than just fear, it's also a sign of preparation. When investors buy gold, they're not only bracing for an economic impact, but also positioning themselves for the eventual recovery. This suggests we might be approaching a pivotal turning point in this cycle, perhaps sooner than many realize. And that brings us to the biggest wildcard in the equation, the Federal Reserve. The upcoming FOMC meeting is set to be one of the most critical in years, as the Fed finds itself with limited options. This is the precarious path they're navigating. Markets are already anticipating not just one, but possibly 2 rate cuts before the year ends. If the Fed holds steady, we could witness a drastic market reaction. Stocks might plummet, bond yields could surge, and gold might become the go-to safe haven. Conversely, if the Fed decides to cut rates, it sends a clear message. They foresee trouble ahead and are attempting to soften the blow. Historically, such moves are a boon for gold. Lower rates make gold easier to hold, weaken the dollar, and prompt investors to flock to hard assets to safeguard their wealth. Here's the twist. The Fed is not merely responding to inflation or GDP metrics. They're keenly observing market signals, including gold's recent climb. In fact, this rally may be putting additional pressure on them, forcing a choice between battling inflation and supporting growth. So the real question becomes, will the Fed's next move stabilize the markets or spark the next chapter in the gold rally? So here we are, gold near $3,700, and markets are buzzing with anticipation of the Fed's next move. The million-dollar question, where does gold head from here? Let's break it down. Big banks like ANZ and UBS are setting their sights on $3,800 to $3,900 in the near term, with some even suggesting $4,000 could be a reality by early next year if the Fed implements rate cuts. That would mark a historic milestone, one many traders once deemed impossible outside a major financial crisis. But here's the twist. This rally isn't just sheer panic. It's steady and controlled, suggesting we might be at the beginning of a longer-term bull market in gold that could unfold over months or even years. On the flip side, if the Fed surprises us with a hawkish stance and signals prolonged high rates, gold could dip back to the $3,500, $3,600 range before rallying again. And let's not overlook the looming threats, geopolitical tensions, supply chain disruptions, or unexpected central bank actions. Any shock event could send gold prices skyrocketing in a matter of days. So is $4,000 realistic? Absolutely, provided this trend continues. The only real question is how quickly we can get there. And finally, let's dive into the most practical part of today's discussion: how to position yourself as an investor in the current gold landscape, ensuring you benefit whether gold continues to rise or takes a dip. Here's the thing. Gold isn't just for billionaires or central banks. It's a tool anyone can use to protect wealth, if you use it wisely. Step 1. Understand your risk. Gold should rarely be 100% of anyone's portfolio. Indeed, gold should only make up a small portion of your portfolio. Typically, it is professionally suggested to keep between 5% to 15% during uncertain times. Think of it as insurance rather than a lottery ticket. It offers protection without jeopardizing your financial future. Step 2. Choose your vehicle. For simple trading, consider gold ETFs like GLD or IAU that closely track gold prices. If you prefer something tangible, physical gold, like coins or bars, can provide a strong psychological hedge. Just ensure you buy from reputable dealers and plan for secure storage. Step 3. Have a plan. Gold can be volatile, so don't buy solely based on trends. Determine if you're investing as a long-term hedge or making a short-term trade, and set your entry and exit points in advance. And here's the most important thing. Don't ignore what this signal is telling you. Even if you never invest in gold, its rise is a warning about shifts in the global economy. It's an ideal time to reassess your portfolio. Are you too exposed to risky growth stocks, or overly reliant on a strong dollar? Now is not the time to sit still out of fear or confusion. Gold's rally sends a clear message. If you listen and act wisely, you can make decisions today that secure your financial future, no matter what lies ahead. So, where do you stand? Are we on the verge of $4,000 gold, or is this just a fleeting surge before the market settles? I'd love to hear your insights. Please drop your thoughts in the comments below. If you found this analysis valuable, smash that like button, share this video with someone who needs to stay informed, and subscribe so you never miss an episode of BrainFuel Reads. Together, we're transforming headlines into powerful insights that can elevate your understanding and empower your financial journey. Until next time, keep your curiosity alive, stay ready, and keep your brain fueled.